Capitulation. The smell of capitulation is in the air, folks. Very important video I wanted to record here today about capitulation. And we're going through a level of capitulation in the market right now. And I want to explain exactly what's going on, my opinion on that, things like that, okay? Nothing to sell you in today's video. Just want to get straight into this, okay? So, first thing you got to understand about capitulation in the market is different stocks, different sectors go into capitulation at different times. There's a very false belief that everything capitulates and bottoms at the same exact time. That could not be further from the truth. Whenever I've heard that, I understand like that person hasn't done their history on the stock market. Things do not capitulate at the same time. Many stocks, many sectors bottom in a crash scenario way before either indexes or other stocks bottom in the market, okay? Now, to illustrate this point to you, okay, let me show you a few stocks, okay? Palantir is a good example. This stock bottomed. It had capitulation way back in May, okay? In May. So this was way before the indexes have even thought about a bottom, right? The indexes, by the way, just hit a new fresh bottom in October. So far lower than the market was on May 11th when Palantir bottomed there, right? Countless stocks have gotten far worse and deteriorated far worse in their stock prices. Meanwhile, Palantir capitulated down to $6 a share back in May, right? And that's when it capitulated. Fubo TV, this one had capitulation way back in July, all the way down to $2.30 a share back in July. Target capitulated all the way back in June. It capitulated all the way down to about $130-ish on just a massive sell-off way back in June. Shopify, on the other hand, has still been in capitulation mode and actually just reached a new capitulation mode in October at $25 a share. Oh my gosh, okay? Netflix, that stock capitulated way back in May and bottomed back in May at about May 11th, roughly. And so that was a bottom right around the same time Palantir bottom. In that stock, that stock bottomed at like $170-ish, $175 a share, somewhere around there. That stock has already gained, despite the market being way worse, and countless stocks being way worse. That stock's up massively from the capitulation back in May. And this is what you see in the market. Not everything hits capitulation at the same time, right? And if you go back in every single crash scenario we've ever had, every single one of them, different stocks and different sectors bottom at very different times. Amazon stock back in the tech bubble. This stock bottoms in September of 2001. Okay? That was a year and a month before the NASDAQ ever bottomed there. And by the time the NASDAQ bottomed, Amazon stock had already like triple, quadrupled up in price by the time the NASDAQ had actually bottomed, right? And look at where the stock was just a few years later. Amazon bottomed September 2001. And by the way, Amazon went down around 90% roughly in that whole scenario, okay? It bottomed September 2001 at 28 cents on a split adjusted basis. A few years later, it's $2.70 on a split adjusted basis, right? The moves are pretty massive. So one thing you've got to understand about capitulation in the market, it hits different things at different times. Different stocks reach a capitulation point way before other stocks, and sometimes this leads people to a false belief that their stock is safe and won't reach a capitulation, right? And as we've seen in this crash, the folks that laugh at the others and say, oh, look at my stocks, they're doing just fine. Those ones have gotten it as well, right? And it's just a matter of time. And right now, we're at a very interesting moment because let's just read this, okay? Let's just read this. When people start selling their favorite stocks, you're in capitulation. That's an old saying in the stock market, right? When they start selling their favorite stocks. So what are Wall Street's favorite stocks? I'll show you exactly what Wall Street's favorite stocks are, okay? Mr. Softy. Microsoft is one of Wall Street's favorite stocks. They love this stock like it's no tomorrow until it was today. That stock lost $140 billion of market capitalization in one day. In one day, $140 billion of market capitalization. Incredible, right? When you see Wall Street starting to sell their favorite stocks, you're in a moment of capitulation, okay? You know what another one of their favorite stocks is? good old Google McDougal. They love this stock. They have loved this stock, and it has carried fund managers to the promised land for the longest time. Not anymore. They sold the stock in mass here today. $110 billion roughly of market capitalization completely wiped out in one day in regards to good old Google McDougal stock, right? That is what you call pure capitulation when they are selling their favorite stocks that they absolutely love, right? This is a sign of capitulation. Meta was one of Wall Street's favorite stocks for years. This stock was $18 a share in 2012. Last year, this stock was $360 roughly, right? So it went all the way from 18 to about 360. You couldn't sell Wall Street stock this if you were Elon Musk right now. And he might be the best salesman in the world. I don't care who you are. You could be the dang Wolf of Wall Street guy. Sell me this pen. He couldn't sell Meta stock right now. There's not a human on the face of the earth that could sell that stock right now in terms of get Wall Street to buy that stock. It doesn't matter who you are. It doesn't matter how you pitch it. They don't want a thing to do with that stock. They will use any reason to sell that stock in mass. And it doesn't matter how much it's down. It could be down 70, 80, 90, 100%. You give them $5 a share. $5. You want to buy it for $5? Nah, I'm good. That's what they say right now, right? That's a sign of capitulation. This was one of their favorite stocks for years, and now they won't touch it with a 10-foot pole. They want no piece of Meta, okay? Doesn't matter what they do. Doesn't matter how you pitch this stock. They will sell it at any price. Any price. It doesn't matter the PE. Doesn't matter the forward PE. Doesn't matter the future growth. Doesn't matter the balance sheet. Doesn't matter that you got Zuckerberg, one of the most successful entrepreneurs in modern history, leading the company. None of that. They don't care about any of that. Doesn't matter that half the planet uses one of their apps. Nothing matters. Nothing. You can't sell them a share of this stock. It's as toxic gets to Wall Street right now. They want no piece of it. None. That is a sign of capitulation when Wall Street is like, we don't even want our favorite stocks, okay? That's a level of capitulation, right? Next up here, this covers Wall Street piece, okay? This is important. I've got to be honest, right? This is a comment on my newest video. Even Jeremy, the biggest knife catcher, has his limits and is afraid to buy the dip now. When Jeremy's afraid to buy the dip, we are officially in serious trouble, okay? So, the reason I got a bunch of comments like that on my latest video was I explained that going into these Meta earnings, I was thinking about buying $15,000 in Meta stock before they reported numbers, but I ended up not doing it. And the reason I didn't do it is because I looked at Google's dumpster fire of a quarter and I got cold feet. And I'm glad I got cold feet in that situation because obviously, $15,000 that would already be down to, if that's down 20% tomorrow, I mean, that would already be down, $3,000 or so? Like that? Like literally snap of fingers, right? So in regards to that whole situation, it definitely does show you that somebody like myself that's, usually just, I see a great deal in the market, I'm buying, right? That shows you that we're in a level of capitulation when even me, I'm starting to think, oh boy, do I really want to buy that today? No, maybe I'll wait till tomorrow, or maybe I'll wait 3 days, but wait the 3-day rule or something like that, right? That's important. Now, something else very important you've got to know about that. Let me ask you this. When was the last time I was having second thoughts about buying stocks? When was the last time? Tell you exactly when the last time was, right? Where I didn't want to buy anything. The last time I didn't want to buy growth stocks was around December of 2018. I stuffed like $1 million in JP Morgan stock and like $1 million in Walgreens and stocks like that, right? But in terms of stocks in general, when was the last time I was scared? March of 2020. That was the last time I started to second guess things, right? Because obviously during that time, it was extremely scary. I think anybody that was invested in the market, stocks were falling 10, 15, 20%. It was the fastest stock market crash in history. We were confused about, if the economy was going to stay open or whatever, right? So that was the last moment where I had like second thoughts about like, oh, maybe I'll wait a little bit here and let's see how this plays out, right? And so when it comes to a stock like Meta, putting that off and being like, let me just see what happens and then I'll worry about buying this, right? That's definitely a level of capitulation in itself. It definitely is, right? You know me, whenever I go through these crash scenarios, whether it's December 2018 in that market, whether it's March of 2020, whether it's this market or anything, since I've been in the market 2008, 2009, I'm never a seller. But at some point in time, even I start getting scared and I start being much more conservative about my buys. And I start thinking 2, 3, 4, 5 times before I start buying, right? And I'm like, okay, do I really want to deploy? Now, one thing I will say about Meta, to be fair, is I'll be buying that stock. I'll probably even buy some shares tomorrow. But the difference is, even though I'll buy tomorrow, I won't buy as heavy as I could buy tomorrow. I'll buy some shares tomorrow. I'll probably save some money and buy some shares lower for, the next few days, right? That's a level of capitulation. When the biggest knife catchers out there like me even start thinking 2, 3, 4, 5 times about, okay, do I really want to buy today or should I wait maybe a few days or a few weeks or something like that, right? That's a pretty big level there, okay? Now, this is a level of capitulation, right? I do a video on Jeremy Lefebvre Makes Money, my new reaction channel, which, by the way, thank you everybody that's subscribed over there. We are now at 17,600 subscribers, something like that. It's absolutely insane. So glad you guys are enjoying that channel. Now, I did a video that was actually a great video to learn from. It's called Palantir Stock is an Easy 3X. So I titled it that. Why do I title that, right? Well, one is the gentleman in the video that I'm reacting to. He's basically explaining through free cash flow, which was a great video on kind of learning how to value stocks based upon free cash flow. And he was showing that based upon his numbers, like, Palantir is at least a 3X over the coming years, but it might be like a 4X, 5X situation, right? So I title it that. Where does it go? It's a 10 out of 10. Means it's the worst performing video I've put out on that channel out of the last 10 videos. Right? That's a level of capitulation because remember, this was how you got views back in, late 2020 and into early 2021 by doing titles like that. It doesn't work anymore. The titles that work now on YouTube, scary, right? This was a video I reacted to. Tesla, don't be fooled into buying the dip. Guess what? That was the best performing video, right? Okay, Meet Kevin just made a bold prediction. Let's be honest. Anytime I throw Meet Kevin in a title, people want to see it because they want to, obviously there's a history there of us debating on millennial money and stuff like that. So that one's kind of a fluke video. I could throw Meet Kevin in anything. It's going to do crazy views. This one, Google just reported a mess. This is bad, right? Look at how that performs. Palantir stock is an easy 3X. Nope. No one cares about that, right? It doesn't get views. It did worse. Look at this. It underperformed a real estate video, which my real estate videos always do horrible. It way underperformed a real estate video. The saddest part is that was actually a good video to learn from, regardless if you like Palantir or you don't. It was just a good video. But no one wants to watch it because no one wants to hear about this stock with 3X or 10X or 5X over the coming years. That's so far from what people want to hear in this market right now because we're in such a level of capitulation and scariness that the only way to get views, to be quite frank, is through the scary content. That's what gets views in this market. And in terms of YouTube finance, it shifts from time to time. There was a time where it was all about, the next big ROI opportunity. Now all people want to hear is scariness. That's all. Why is every single one of the biggest finance YouTubers out there doing super scary titles? Because that's what gets views. That's what gets views. The positive stuff doesn't get views in this sort of market because no one wants to hear it. Now, it's unfortunate because this is an ultimate screw up. And almost you can tell when you should be buying stocks and shouldn't be buying stocks based upon how YouTube finance is going, right? And basically, when you see everybody doing scary titles, you probably should be buying stocks, honestly. And when everybody's doing super positive to the moon content, right? And you start seeing videos popping off that are getting crazy views on why Bitcoin's going to 100,000 and why Bitcoin's going to 1,000,000 and why this stock's going to 10X and this stock. That's when you know, okay, maybe I should contemplate shorting some stuff. Maybe I should cash up a little bit now. Honestly, I think YouTube's become a pretty good gauge moving forward now on when it's time to maybe cash up a little bit. Or consider maybe some put options or something like that, or time periods when it's like, I should be deploying capital in the market, right? And right now, it's obviously a scary time, and everybody just wants to click on scary titles. That's a level of capitulation right there that I think is very important. And I am telling you, social media is going to be an important factor in the financial markets moving forward in being able to judge which direction you should be going toward. And when things are getting way frothy, it's time to shift the other way. And when things are getting this level of ugly, it might be a time to at least consider consider the other side, okay? Now, the thing that's adding a lot of confusion in this market right now is the dollar index, right? Dixie. So the dollar index has been going up obviously massively over the course of the past year or so. And the thing that's adding confusion here is you could get some bad earnings from companies, but it doesn't mean the entire market necessarily is going down. Because here's the bottom line. If the dollar index continues to go down, 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 the market's going up, 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 regardless of bad earnings. And that's the confusing part. So you could get individual stocks to sell off here and there, right, on their earnings. But it doesn't mean the whole market's going down, actually. And that's the intriguing part. Now, if the dollar starts shooting up again, stocks are going down, the whole market's going down again. And unfortunately, as bad as it bothers me, that's the way it is right now. I don't agree with it. It's very frustrating to me. I think the market should go off of fundamentals and where these companies are going over the future years and valuing them appropriately. But that's not the market we're in right now. Bottom line is the dollar shoots up massively tomorrow. Stocks are down huge. Dollar goes down tomorrow, especially in any significant way, it's likely the market's going to be green. It's as simple as that right now. And like I said, it's very frustrating for somebody like myself as a fundamental investor, a long-term investor, to admit that. But it's as simple as that right now in the short term. And it probably will be that way for at least the next, I would say, 3 to 6 months. Okay. Now, frustrated. It can be a very frustrating market, right? And this can be frustrating for a few things. Okay. First thing I want to talk about is for the longs out there and for the people that have been buying stocks in 2020, or excuse me, 2022, I think my mind's still in 2020. Okay. In 2022, you have to endure a lot of trash talk right now. And it's a lot of trash talk. And I understand, okay? You go on message boards, you go anywhere, and it seems like people are just, poking you like, aha, you idiot longs, you just lose a bunch more money and this and that, right? And I understand it's a very frustrating time from that angle about the amount of trash talk, about the amount of put down, about the amount of people that are going to say, I told you so. You shouldn't have been messing around with those stocks. You shouldn't have been buying stocks. Look at how much money you're losing. Oh, I saw your stock just went down a bunch more today. You're going to have a lot of people sticking their fingers in your wounds right now, okay? That's the way it is. You got to come to grips with that and just acknowledge it. It is what it is. I know it's frustrating. I know it's annoying. I know it is, okay? Because on some of these message boards, if you want to go on there or even talk stocks with folks, right? It seems like there's no safe space out there because it's just short sellers or just people that aren't even short, just talking crap. And it's everywhere, right? It's very prevalent. Sometimes I think it's not even short sellers because here's the thing. If people are making a lot of money, usually they're a little quiet about it, right? If I'm making a ton of money in stocks, do you think I'm on message boards like, oh, you idiot short sellers, you're losing so much money? No, because I'm making a bunch of money. Think I care? I don't care about what's going on out there. I'm busy making money. I just made another 50,000, another 100,000, another 200,000, another $250,000, another $500,000. You think I care about going to talk trash on a mess? No, okay. So that's why I think a lot of times it's just trolls and just people that just want to put other people down. And really, they're not even making any money off the situation. They're just there to talk trash. And it's a very weird dynamic. I understand. And I had to come to grips with that way back in the day. Way before I was ever on YouTube, there were some stocks I was in back in the day that were heavily shorted stocks. One of them was Cirrus Logic. And I would see these people go on and just talk trash about Cirrus Logic back in the day. Cruisy Doozy, which made a ton of the chipset go into iPhones essentially, right? And it's just very weird. And that was when I first came to grips with, wow, people really just like to talk trash. Like it's just a weird dynamic. Like go on message boards and say this and say that. But you got to understand and just come to grips with that, okay? It can be frustrating. I understand. You got to get over it. It is what it is. And it's not going away, okay? And there's definitely the people do it on the other side. Longs do it on the other side. They talk trash. And sometimes it's not even the people that are making the big money. Because like I said, the people that are making the big money, it's not worth your time and attention if you're making big money off the situation. Like you get nothing out of that. Like you make $100,000 on a trade or something like that, or an investment. It's like you think you're going to spend your time on that? No, it's not even worth it, right? Sometimes I think it's either people that got just very small amounts of money, or just people that are looking to talk trash in general, right? Now, the other frustrating thing about the market is you can get in these markets where you're getting a lot of bad news. Well, basically in life in general, usually bad equals bad, right? Good equals good, but not in the stock market. So you can have dynamics in the stock market where you could be getting bad earnings, right? And a lot of companies reporting bad results, bad guidance, And you could actually see the stock market going up. And I just explained the dollar index, right? If the dollar index continues to shoot down, it doesn't matter actually what companies report for earnings. Those individual companies can go down, but the market can go up. Today's a perfect example of that, okay? Today's a perfect flip and flapjack, an example of that, because the market should have been down. I'm talking about the S&P 500. The S&P 500 should have been down 3 or 4% today. Easy, okay? 3 or 4% easy. The S&P 500 was down 0.7% today. 0.7%. It should have been down 3 to 4%, but the dollar was down pretty good. So if the dollar is down pretty good, the S&P 500 is going to be hard to get that down in any significant way. The Russell was up today. The Russell Wilson, are you kidding me? And the Dow eked out the smallest gain in the history of the Dow, maybe 0.01%. But it did eke out a gain, right? So that's kind of frustrating from that angle, right? And we've seen it play out the other way. We've seen it where companies report actually pretty good numbers and their stocks are going down in a massive way. That's the way the stock market works. And I watched it. You could watch this in March of 2020 and into April and into the springtime of 2020. Economy was devastated. Unemployment went to, 15 or 20%. Companies were reporting horrible numbers. Companies were reporting horrible guidance. Where was the stock market going? Straight up in a straight line. And it's like, how? Companies' earnings are trash. Companies' earnings are going to continue to be trash. Every company's scared. Unemployment's going to 15 and 20%. How is this market going up in a straight line? And you got to wonder that, right? And yet, next thing you know, the market was right. The market was right to be going up. Because guess what ended up starting to happen? By the time you got to late 2020 and into early 2021, look at the numbers these companies started reporting. Look at Google, look at Meta, look at Apple, look at Microsoft, look at Amazon. The numbers they were reporting were extraordinary. The market was right. Now, you go back into 2022, right? And we just reviewed this year. Tons of stocks tanking across the board. Devastation, right? Meanwhile, earnings were holding up pretty darn well for a while there. So it was very frustrating because you're like, wait, these earnings are actually good, these companies are reporting. But maybe the market was right because now you see Microsoft reported not a very good quarter. Google report a horrible quarter. And Meta report a dumpster fire quarter. We'll see what happens with obviously Amazon and Apple. So the market can be very frustrating. You just got to understand that is part of the game and it's part of the capitulation game. It goes through cycles. Hope you guys enjoyed today's video. I hope you got some good value out of it. I hope you enjoyed this video. If you want to say hello to me on the gram, go ahead and say hello to me. Much love as always. Thanks everybody. Subscribe to the channel, including the new channel, the reaction channel, and have a great day.